Hey everybody, welcome back. You know me, Kaylee McMahon, and we have an awesome guest with us today. We're going to be talking a little bit about two different topics, so stay tuned after this first podcast for a second one. Our first topic is going to be about long-term holds in multifamily real estate. So our guest, her name is Sandhya Seshadri, and we're going to have her introduce herself because I won't do it justice. Go ahead.
Hi, thank you so much, Kaylee, for having me on your podcast. My name is Sandhya Seshadri, and I'm a Dallas-based investor and apartment syndicator. My background is in electrical engineering. I have a master's in EE, and I worked for years in the corporate world here for a local Fortune 500 company in Dallas. This is where I've lived for over 30 years. And after my EE and working in the corporate world, I realized that all the decisions are being made by the business folks, so to speak. They're telling us what to do kind of feeling. So I went back for a part-time MBA, understood finance, and then I took on larger projects. So my most recent project was an $80 million project for them in the wireless space. But after that, I went completely into the stock market. Once I had a family and I had kids, I was like, I need my flexibility of my schedule. I can't no longer be doing these 60, 70-hour work weeks. I need to be more time with my family. So I got completely into the stock market. It was fairly straightforward. The stocks were doing really well, and so that was plenty. But then I also started paying a lot of money in taxes. So I wanted to get into real estate. But every time I looked at single-family rentals, I didn't want to deal with the 3 T's, the tenants, toilets, and trash. So when a friend told me about multifamily investing, where you can hire a property management company to take care of all of your day-to-day tasks like day-to-day leasing, maintenance, etc., and you just oversee it as an asset manager, it made a lot of sense. And that's what got me into multifamily.
Very cool. As we were talking before we got on here, you kind of just made a huge leap. So we won't talk about that today because that's a whole nother session on mindset. I mean, all kinds of different things. But today what I want to cover is the pros and cons of multifamily ownership and really first of all, how multifamily creates cash flow as an owner, and then also even as an investor, because as an investor you get some of the cash flow as well. But we've covered flipping apartments before in kind of like a short-term scenario. We have not covered long-term hold for apartments, which I think, if I understand that correctly, it's 10 years-ish time frame plus. So I would really love to interview you today to hear about what you think. Let's start. What are some of the cons or the difficulties of having something that you hold for long-term?
Well, depending on the age of your property, the longer you hold it, the more the maintenance you might have to do to it. So you might have to, address some of the major deferred maintenance issues, whether that's replacing your air conditioners, doing, plumbing issues are a big one if your properties are C-class properties built in the 70s or even older than that. Another thing to keep in mind is typically when you buy a property and you do it the short-term way, which is, 3 to 5 years, you get rid of the property. A lot of the things you do for forced depreciation, right, which is bumping the rents, doing the little minor changes to increase your rent, all of that sort of flattens out as you hold it for a longer time. So it is not quite a big rise in your increase in your cash flow as it is in the beginning, because you don't get that huge number when you sell the property at the end of 3 or 5 years to have a nice return, like, oh, I got 20% IRR in 4 years kind of thing. This is more of I've bought it and now all I'm going to get is this rental income. So that's one thing to keep in mind as a con. The other thing is the opportunity cost, because let's say you sell this property in 5 years. You've got the opportunity now, because you've got your money back, to go and put it somewhere else that might be a better investment, which provides a better return on your investment. So that is one thing. So those are some of the cons I can think of in terms of doing a long-term hold.
One thing I wanted to ask that might be a con, but I could be incorrect. So like kind of how you mentioned how like bumping the rents up is going to become kind of flat over time. I know that, for example, whenever somebody's doing something and it's working well, like you've got the property operating pretty well, there aren't large problems, you've got your tenant base into a good place, that people tend to become comfortable. And so, for example, there are different ways to find different debt out there that may be a better scenario. Like I doubt that somebody who's holding something for a long time, I'm just thinking in my head about when I find someone who's been holding it for a long time, that they're not necessarily shopping for new loans all the time. And sometimes when you're getting a new loan, you find new opportunities. Is that accurate or no?
I think it depends on the scenario. One thing I've seen some friends do that we're planning to do when our prepayment penalty gets lower on a property is to cash out, refi, and take it maybe into a HUD loan. The process of applying for that takes longer, but the terms are easier. And a lot of the restrictions we've seen in the past year with COVID due to Fannie and Freddie are not existing with HUD in terms of eviction laws, applying for forbearance, a lot of those things. So HUD is a nice option. The other option is once you have so much equity in the property after 5 years and you cash out refi, you can have nicer loan terms. If you know you're going to hold it for a long time, who cares about a prepayment penalty, right? So then you might get a more attractive loan term as well. If you know you're not going to sell it for a while, it is a buy and hold strategy. So I think it just depends on every case is different. And depending on your strategy, you pick the right loan that matches your strategy, your investment strategy.
Right. Now, when it comes to this term, can you explain it to myself and our audience? Whenever you are depreciating a property, what does it mean when the property is fully depreciated, and what are good or bad things about that?
So lately, because we've had President Trump in office, he introduced this Trump tax law, which is basically allows you to depreciate a lot of your property, the wear and tear of your building and all the equipment, etc. Instead of doing it over a 10-year period, you could do it all in year one and fully take in all of those, shall we say, tax breaks. So your K-1 losses, which are actually paper losses against your taxable income. So that's been a big tax savings for you. So once you use it up and you're still holding on to this property for the next 10 years, that K-1 loss amount is going to be a very tiny number as the years go by. So this property is no longer giving you the tax benefits that you were hoping for from real estate. It's just a good cash flowing asset, much like a dividend stock, if you will, in terms of comparison.
Okay. Well, someone had said that, and I'm like, I think that's kind of what we do anyway.
Yeah.
Now, on a long-term hold property, so I've done some that were a really quick flip that, 12 to 18 months kind of thing, and it really didn't make sense to do like a cost segregation study, for example. Are there other things, like including a cost segregation or other strategies like that you can take benefits from because you're holding it longer?
One of the biggest things of holding a property longer in terms of benefits is you get to fix it up right, and then you're holding it. So all the repairs and everything is not thought of as short term. But in terms of depreciation of the property, depending on how you decide to do it from an accounting standpoint, if you took most of it in your first year, then you're not going to have as much left for the remaining years. So keep that in mind. And so address that with your accountant to either spread it out over several years or keep it, like for instance, in my case, it's just me and two partners. So in the first year, we did the paper loss and all of that to give it out to our passive investors. But we are planning to do a cash out refi to pay back our investors, and then just the three of us hold it for the long-term period. So at that time, we're going to go back to our accountant and say, what are some tax strategies we can use to get some of these depreciation types of benefits again, now that we're almost like selling it out of that LLC and buying it all as a new LLC. It's still a transaction happening here.
Right.
So
how many times can you refinance a multifamily property?
I think as many times as it makes financial sense for you, right? Because there's a cost associated with it. You have to pay a fee to the lender. The loan terms will dictate whether or not it makes financial sense to do it. But it's sort of like taking a home equity loan in a way. You're using the equity on your property to cash out refi and get more cash to yourself to then put it as investment somewhere else. So it just depends on your strategy. Hey, I have this other really cool deal coming up. I want to get some cash out of this because I have too much equity now for having held it for so many years. And then, again, financially analyze it and see if this other opportunity makes sense to cash it out as you go along, like every 3 to 5 years if you need it.
Okay.
Right? And so it depends on the prepayment penalty terms of each new loan that you subsequently get from it.
That's smart. Keep that in mind, the prepayment. Mm-hmm. Now, when it comes to a longer hold property and you're wanting to, like you mentioned, starting a new LLC. So what is the typical structure when somebody's setting up a longer term hold? So, for example, I've heard people call it a legacy property. where my understanding or idea is that like my shorter ones, we'll keep our investors in and we'll all get out together, move on and do another deal. In the longer term hold, how does that usually work?
We just buy it out ourselves. So we're basically, paying off all our investors. So we're going from, say, Property ABC LLC, which is holding this, and all the investors get paid out, and then it's bought by Management ABC completely. And so we're basically buying out all of those shares. And so we can buy it at whatever price we think is fair for the market at that time. And as long as we met the numbers that we promised our investors initially, then pretty much we are done. And then it's up to us, the owners, to decide how we want to do it. So I'm looking at some JV projects with just 2 or 3 other investors that we're going to, right from the beginning, not have to deal with passive investors at all and buy it as a long-term hold for ourselves. Mm-hmm. So we're doing everything, every little rehab and fix exactly right so that we don't have to ever deal with, whether it's the CapEx is costing me a little bit more now versus later, or the accounting is done only on the 15th of the month. So when I report on the 1st of the month, the numbers are off. All the things that you do to please your passive investors, you don't have to deal with that. And so when we buy it as a JV, it really makes sense to do it as a buy and hold long term. Yeah. So then it's just up to the partners to figure out what they want to do each time.
Interesting. Yeah. Have you ever heard of a independent rental owner or an IRO?
I have not done that. That sounds like a solo adventure to me.
I think it's similar to what you're saying, where basically it's just instead of having passive investors, you're just doing like a JV or some sort of structure where it's just the partners, I think. Yeah. But I was told that kind of, once I get going and once I get a couple of flips under my belt, that I'd be able to do something like that and kind of be at your level. So I've thrown that term around and some people are like, what is that? I'm like, I think it's like there's a certain group of people. I think that's like their terminology, but yeah.
I mean, a rental owner sounds like a smaller sized property rather than multifamily to me. I'm talking, 100 doors plus kind of properties. And so we want to just joint venture buy it as 2 or 3 of us together so we can hold it forever and cash flows. And we make all the decisions on fixing it right so that even if it's long-term tenants, we're still able to get the market rents that are fair for that property by periodically doing the enhancements that it deserves. So, a couple of years ago, black and black appliances were the rage. And now everyone's like stainless steel. So again, there's still opportunities to upgrade things. You go from your flooring, your light fixtures, your bathrooms, everything. So you can still do that every 3 to 5 years like people do with multifamily, except you still hold on to it long term. And that's the way you keep adding value. So you can continue to do your rent bumps.
That's smart. Now, whenever, it's just... Okay, I guess actually to get into like the nitty gritty of like that transition process between having it set up as some sort of a group purchase and then paying the investors or the passive investors out their portion of ownership or their expected return. Now, is it at that point? Is it? It's not a real estate sale, right? It's just buying shares, right? Is that correct?
To get into I think you can do it both ways, but we were looking at it as actually like selling the property, but buying out the shares of all of the part of the passive investors. Mm-hmm. So the ownership actually does change hands. It's no longer that LLC. And in that sense, for us to provide that return to our passive investors, you have to be buying it at that selling price. Like, my property, we bought it at $6.75 million, for example. Mm-hmm. If we're going to be selling it at the $10.2 million mark sometime in the next 6 months, we have to pay that price so that the passive investors get the returns we initially projected. So in that sense, it is a sale with a new tax, new appraised price, et cetera. But then that also gives us the opportunity to go all over again and do the same cost seg, bonus dep, et cetera, and give us the tax savings. So you still get that when you do that, when it changes hands like that, because you are paying out your passives.
Okay. So
you get to restart like a new purchase, except you're the purchaser yourself instead of another set of hands. So initially, because we didn't have the money ourselves, we had to raise the money from passive investors. But now the property has had so much increase in value, and we've had so much equity. And over the years, we've acquired other properties too. So now we can afford to just buy it back and own it ourselves because we love the property so much. There's no reason to sell it to somebody else.
Right. That's smart. Really smart.
Yeah.
I just wanted to ask a few, little details. Now going to like the pros of a long-term hold situation, would you say that some of the things that, discourage me from going to a market where it's more historically based and it's a process to get approval from the city to do certain renovations and things like that is just because I'm going, well, shoot, I'm going to be in and out of this in a couple of years anyway. Who cares? I don't really need to spend the time to do all that. So I'd prefer to not. Would you say that having a long-term hold gives you a little bit better of a, I don't know, like an approval rating with like the city historical board or things like that when you need things done, or if you're buying another property that's nearby because you're not necessarily in and out, that you have more leverage with the city?
It definitely is a relationship building process. Like initially when we took over our property, we had a lot of minor renovations to do for which the city folks got to know us pretty well because they had to come out so many times, got to know our lead contractors, etc. So now they're familiar with us. So I think that if we went in to do a bigger project at some point after doing this cash out refi, the city would still be more open to working with us because they know that we follow code. They've already seen us do projects and not had a lot of issues afterwards. We take care of, even the lender required repairs kind of things first. So the parking lot looks nice. It's a well-maintained property. So all of these things, build up your brownie points with the city. We have some space there where we could actually build a little bit of like storage units kind of thing. And so that's a longer term project that we may not be able to do immediately, but we're definitely looking into it, and that would require permits for the city, etc. So the longer you stay, the more the city folks know you, and it definitely helps. Like when we had a little bit of a problem with trash in our dumpsters from other places, etc., we had them patrolling at certain times where our cameras caught people, and the problem went away. So, we have a good connection with the local police department and other city officials. And having that definitely helps you when you're in a tight situation.
Can you give me another example of a tight situation where obviously building those relationships is really key?
Yes, we have a laundromat right on the other side of our property, and some tenants were complaining that a lot of the people from there was the fence, they kept breaking it at a specific location and then coming over, dumping stuff, but also people said they smelled the drugs, etc. in that area. And so for a while, we had a courtesy patrol officer actually stay at our property at a discounted rate. And he was also able to inform people, the police, to come over and patrol at certain times and catch them. And the problem went away. And we were able to put a metal barrier in that fence to where people could just break and come in. But again, that's another example of the city really knowing, the police knowing that we want to address problems quickly. We don't just want to, be absent landlords who don't know what is actually happening at the property. So it kind of communicated to them that we were very attentive and took care of issues right away. So our tenant satisfaction ratings also went up because of it.
Oh, there you go. That's awesome.
So ultimately, that's what, your reputation, you want to bring the right tenants into your property. They are your customers. If it weren't for them, you would be out of business. So treat them like they are your most valued customers. Then bring the right ones in and then keep them by addressing all the little, annoyances and issues and any complaints they put in there. Address them right away. And that's the way you stay in business.
That's awesome advice. Seriously, that's great advice and so true. Now, when you're talking about little renovations that you're doing that either add safety or add value or income or whatnot on the property, when you're doing a long-term hold, so for example, on a shorter term, there's usually a business plan of, hey, we're going to do this will get us this value, and then that's kind of it. But when you're staying in it longer term and you're going through several different refis over time, say 3, for example, if you've had it for a long time, it's every 3 years or so, when you're doing that and after the limited partners are not in the deal anymore, how does it work, or what would be the best decision and why? For example, you take that refinance cash and, normally you go, okay, I'm going to pay the investors with that cash or do additional renovations. When you're long-term holding it, what is usually the decision process, what to do with that cash?
Does it make sense to invest it back in this property, or are we moving on to another investment? So that's the big one. So let's say we've decided to reinvest it in this property. An example of a large upgrade that I'm already planning for one of my recent acquisitions is it's a chiller property. So to convert it into HVAC would be like a complete game changer for it. But that's a very large upgrade. I don't have the cash flow right now and the CapEx to do it for all of the buildings. So I see myself doing half of it and sort of leaving meat on the bone for the next one. And we can already see it to where there's like 10 units that have been converted out of 116 in this property. Tenants want those 10 units. So I asked my leasing manager, what does it take for you to stay and live on site instead of somewhere else? And she's like, oh, give me one of those 10 units, I'll stay. You know, I want that temperature control. So that's an example of a large CapEx project that I might consider spending my money on, just because it's going to upgrade my property. And it's not just to the outside world for selling back, but it's also for tenants itself. I will recruit a different level of tenants who will stay because they can do temperature control. I mean, being in Texas, that is very important in the summer, to not have a chiller property with window units and solar screens that are broken to fit those window units, etc. Yeah. So depends on the financial plan. Yeah. Like, do you have another investment you'd rather put that money into? Or is there still a lot more I could do here and still get value for it? Because there's rebates through Encore and other programs when you convert it to HVAC from a chiller property. Yeah. So it could be very affordable. All you would need is, maybe $3,000 to $4,000 per unit that you want to change it to. Wow. So,
now, when it comes to long-term hold and, again, back kind of like to the city question, whether it's local or whether it's a national program, sometimes there's these, like you said, HUD, for example, but sometimes there's affordable housing. Does it qualify as, like, so for example, not as nice property in a really nice area? So for example, sometimes cities or different municipalities will have incentive programs or grants or things like that. Is that something that when you're holding it long term, you for sure are like, we're definitely going to go down a list of what's available and go after that every year? And have you had success with that?
So the property we acquired had some... it was 86 doors, and there were about 12 tenants who had been there for a long time and who were in some kind of a government-assisted program. I don't know if it's exactly called, it's Section 8, but it's something more geared towards seniors. And their rents were so low. They were about $250 below market when we acquired it. And so this program was capped at a particular number. So if we had to go back, our leasing manager had to go back several times to the city and appeal to this particular organization that was doing the grant to increase that limit by $250 to match market rents. And so once we were doing that, now I have those are like the tenants who pay exactly on time because it comes directly to us from this organization. So we're always looking for programs like that. Yeah. So another thing we did in light of COVID is on one day, my leasing managers assigned half a day where she spent it in the courtyard to be COVID safe, and got all the tenants who couldn't pay their rent in full, some of them paid partial amounts, to come one by one, socially distanced, and she helped them fill out these applications so that they could get the rent granted or health assistance programs through various organizations filled out accurately, because a lot of them don't fill out the paperwork correctly and they get denied. So she made sure they filled it out correctly and she mailed it. So now for November, December, January, we got the rents paid directly to us instead of going to tenants and them buying big screen TVs. So we're constantly in touch with any kind of programs, stimulus packages, you name it, local organizations who want to support our tenants and do things like that. And community appreciation is a big one for me. And I wanted to give everyone free turkey for Thanksgiving. That was just one of my favorite things to do. I love seeing people and I love giving food. This is, I think, my culture too. We love feeding people. Yeah. So we got there's a food lunch assistance program that used to bring lunches during school days. And so we asked them about getting free turkey because even my local grocery store couldn't give us these huge turkeys, 15-pound turkeys for this many people. But this program was able to do it. So every one of my 86 tenants got a free 15-pound turkey, and it didn't cost me a dime. Wow. So yes, to give you examples, yes, we're constantly looking for organizations that can come and assist our tenants the way they need it.
That is so awesome. Seriously. Now, I think that I don't know, I mean, you can tell me if I'm right or I'm wrong. I would think that having a property longer term versus shorter term, you'd be able to do more of those things. When you're shorter term, you're kind of probably focused on getting in there, making sure we get the business plan executed and getting out. And so that's a really good really big pro that I really admire you for, because I think there's some individuals that I've even partnered with that is just not on the radar, that is not their thing at all, and it's mine, and that ends up turning into a fight about basically taking care of our people. And I'm just like, it blows my mind that somebody, it's like you said, like your income doesn't exist without these people, so, and I'm like, and I get it that when they leave because they don't feel appreciated, I'm eventually going to be the one that has to deal with the lease up, because I'm asset manager over the property manager. I get it. I'm the one that has to do the work, but still, I'd prefer to do exactly what you're doing, and be able to take care of the population or the community that you're serving. Now, when it comes to long-term hold properties, have you ever seen a situation, this is on my last question, have you ever seen a situation where you kind of mentioned being able to work with the city and reduce crime over time? Have you ever seen a situation where it was kind of the opposite effect? Normally we're able to, like you said, change the tenant base. We're able to take care of issues, make the property more secure, put cameras, things like that. Have you ever dealt with an area that, like I've seen a few areas of Fort Worth, for example, that were kind of coming up and we're doing well. But honestly, because of COVID, I've seen like a bunch of different restaurants and shops and things around there closed down. And so there have been people kind of coming in and out of those closed businesses, and the area is just getting kind of worse. Has that ever been an experience that you've had? And if so, how did you deal with it?
We haven't had that experience, but one thing we closely monitor is the crime stats and the trends in the property. So as boots on the ground, I'm there at least every 2 weeks or so as part of my rounds, but also the cameras tell you a pretty good story. So I can log in with my phone app at any time, even at 2 a.m. in the morning if I happen to be awake, and just say, oh, what's going on here? What's happening in my exterior? And certainly the crime data in that area you will be aware of, because now our leasing manager actually lives on property as well. So she has a pretty good pulse on that area. So it's like a small town feel at this Cleburne property. And I don't see the crime getting worse there. But if it were, I think we would know. It wouldn't just happen overnight.
Right.
I think we would start seeing the trend, and then we would address it in some way. Because of our relationship, again, with the police department, I think we would find ways to address it. We would probably get more active in the city meetings, city council meetings, to sort of point this out. Probably just the easiest thing that I have seen is that is effective is a picture is worth 1,000 words.
Yeah.
Just go take a video of anything that's a mess, that is unacceptable, and it is swift how quickly they take action on things. Like we had a skip, an apartment skip, and then this person, I guess, had left quite a mess that includes anything from pizza and food, etc. This was at a different apartment.
Bugs, yeah.
And the first time I walked in there, I took pictures and videos. And then I said nothing. I just assumed my property management would take care of it. But I come back a week later and it's not been cleaned out. And their excuse was that the trash dumpster is full. And so all I did is I took that video and photo, forwarded it to the regional director of my PM company and said, this is a hygiene and pest control issue. You need to clean this up. I want this done by the end of today. Otherwise, we will be looking at another PM company if these kind of issues are not addressed. Because I'm not paying for pest control and this much labor for you to not clean it up. So along the same lines, for crime and for issues happening in there, if we were able to take pictures and videos, I think we would handle these issues quickly and swiftly. If nothing else, just get courtesy patrol in those areas on a regular basis.
Yep.
Would solve a lot of the problems.
Now, whenever you're having, one more question, and then I'll be done. When you're having those property meetings with the property manager, do you schedule regular meetings once you're long-term holding? So, like what I'm used to is that when you take over, obviously you're really on top of it. You have it like every week, and then you go to bi-weekly, and then monthly, and then kind of depending on what's going on. If there's no construction left, it's kind of like, well, I guess quarterly. You're physically going there yourself, but as far as like having to have a meeting to discuss what's new, because most things kind of after when you're anyway. So whenever you're long-term holding, what is your regular cycle of meetings where you're having to sit down with the property management, construction, whoever needs to be consulted?
We just do monthly calls once we get to that point. So we moved from weekly to bi-weekly, and then we got comfortable with the company. So the only time we really need to have longer discussions if any of our KPIs are not being met. So, when all our incentives are structured around renewals rather than new leases. So retain the good tenants, because we save that several, 3, 4, 5K of unit turn costs and upgrades. If we can keep the same tenant at the market rent, that's all we need. So I think that it's on a case-by-case basis. If we suddenly had a new project coming up, we might go back to weekly calls just on that project. But I have them all on, now that we're so comfortable with each other, we text each other. I mean, I would send a text on a Sunday morning and I'd hear back within 30 minutes. Or, sometimes my VP of my property management company would be like, I'm driving, Sandhya. Can I just call you in about 15 minutes? I'm on a long drive. And so we'd have an hour-long call about the world and about, property management in general or new properties to look at, as well as the specific issues we want to address with this property. So I think it's the relationship. I think you realize that your property management company is your best friend and partner in making this a successful investment, whether it's for your passive investors or for yourself, with the ultimate goal being taking care of your customers, which in case are your tenants.
Yep. Absolutely. Well, we have spent about 25 minutes on the call, and I want to respect your time, of course. Thank you so much for sharing a little bit today about your experience in long-term hold multifamily. This will help a lot of women to be able, and people, period, to be able to understand the difference between the two. Flipping that, you're used to with me, and then being able to look at another alternative way to do the same type of investing, but just in a little bit different way. How could our audience get a hold of you if they have any questions or want to work with you?
They can find me on my website, multifamilyforyou.com, where the 4 is number 4 and the U is spelled out YOU. So multifamily number 4YOU.com. And they can type a message or just put their name and email address, and they can get a passive investors checklist from me for free, how to vet a sponsorship team, and it does not sign you up to any future emails. So no, I will not be spamming you just because you visited my website once. Unless you want to, you won't hear from me again.
Well, thank you so much for your time today, and we look forward to having you on our next segment, talking about negotiating.
Awesome. Thank you. It was such a pleasure to talk with you, Kaylee.
Absolutely.